Good morning folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade. Welcome to our daily fundamental analysis video. Let's begin by looking at the equity markets. All the three major US indices, the S&P, the Nasdaq and the Dow Jones indices closed in a positive territory yesterday. As you can see in the chart, the momentum for the Dow Jones index is still skewed to the upside. Why? Because since the index touched that 23rd March low, the momentum has been pretty strong, and even yesterday's price action shows that the price closed in positive territory. However, when we begin to look at the European market reaction, especially today's market reaction, all the momentum is to the downside. When we look at the CAC, the FTSE 100, the DAX, the Spanish IBEX or the FTSE MIB, Stoxx 600, Stoxx 50, all these indices are trading to the downside. Now the question is why? There are a number of factors for that. A is the IMF said yesterday that the recession is going to be the steepest in nearly a century. So investors are really paying attention to those narratives today. B, we have IEA coming out and then saying that the demand is going to be enormously hit during this month, and then they see massive dent in the oil's demand equation. And thirdly, the focus remain on this particular fact that Donald Trump is picking up, let's say, fights with other agencies such as WHO, and then if he cuts the funding, how that will really would act. But going back to the commodity space, and speaking of that sell-off that we're seeing in the energy space, as you can see in the chart, crude oil prices crossed below that critical level of $20. Now remember that support is between $20 to $16. So the price is still within that area of support zone. And as long as investors are mindful of position sizing, I think this remains an opportunity. I've done this extensive technical analysis on oil prices, specifically about crude oil, in our technical video on our YouTube channel. So please do have a look on that as well. But for now, I think among traders, the focus is that the current sell-off in oil prices is going to trigger a wave of massive, let's just say, mines of bankruptcies for the US shale oil industry. And the question is if Donald Trump is really going to do anything about that. Remember, he's always talked about saving jobs, saving industry, bringing jobs back. But now crude oil sitting at $20 represents a massive threat to the US shale oil industry. Previously, Donald Trump was quite happy that he forged a deal between Saudi Arabia and Russia and then got that 10 million barrel production cut, or near enough that. But now, obviously, given what the IEA is projecting with respect to demand dent in this particular area, that 10 million barrel cut is really out of a window and it doesn't really matter. So what we need Donald Trump to call all the Texas oil producing officials, all the Texas officials which are involved in oil production, back to his office and then ask them to perform that organic oil production cut. We definitely need that from the industry, because it is not going to be Saudi Arabia and Russia which is going to be again coming up and then doing something with respect to the oil production. I think they've made themselves very clear that we need action from the US shale oil production, and it is Trump who can really put pressure on Texas officials and call all those Texas people back in the office and then ask them that it is time to perform that organic cut. Remember, you can always protect your upside or downside position by using AvaProtect. Stay safe, stay home, and I'll speak to you guys tomorrow.